So just imagine buying an unlimited number of properties with no verification of income. That's right, no verification of income. No tax returns, no pay stubs, no nothing. In this video, I'm going to dive deep into DSCR loans and why this loan product has become so popular in the state of Texas. And stick around to the end, I'm going to share with you a consumer guide that I wrote to ensure you get the absolute best deal on your next mortgage. Hi, my name is Mark Harrison with Texas Mortgage Source, and I get calls and emails every day from investors just like you looking to make a move and invest in Central Texas area. And I actually love it. So whether you're buying 1 month or maybe 1 year, give me a call, shoot me a text, send me an email, and let's find out the best loan program for you. So as a mortgage broker since 1985, I have helped actually literally hundreds of investors around Texas, and I really want to help you as well. So let me start with one of the most common questions I get from real estate investors. And it's not the question they ask after we talk a while, but the very first question they ask. It usually sounds something like this. Hey Mark, how much money do I actually need to close a property using a DSCR loan? And what they really mean is, tell me the real numbers, not the optimistic numbers and not the internet numbers that I find online, but the real ones. Because just imagine finding what looks like the perfect investment property, running the numbers, getting excited about the deal, and maybe even mentally planning the next renovation for the first tenant, and then discovering you underestimated the cash required to actually close a loan. You know, that's a very frustrating moment. It happens more times than you may think. So today I want to walk you through what most experienced investors understand about DSCR loans, capital requirements, and what it really takes to step into the rental property the smart way. I work with investors across Texas who are buying their very first rental property, building portfolios, or scaling to multiple doors. And my goal today is very simple: to help you think about your cash requirements the same way experienced investors do if you're new to this. Now, before we talk numbers, let's talk about your mindset. First of all, there's two types of investors I meet all the time. The first investor asks the question, what's the minimum amount of money I need to get approved? Not a bad question, but not the question you should be asking. The second investor asks a slightly different question. What position do I want to be in after I close? And those two questions lead to a very different outcome. The first investor also often ends up feeling, stretched and stressed out. I see that a lot. The second investor ends up feeling prepared and in control of their future. If you plan on owning rental properties for years, control really matters in this market. So let's break this down simply. When you're using a DSCR loan, there are really 4 categories of cash you need to expect to think about. First is your down payment. Second is the closing cost. Third is what the lender calls reserves after closing. And fourth, the people often forget, is the unexpected, the maintenance items that you may have to worry about. So let's start with the down payment. DSCR loans are investment property loans, which means lenders typically require much more equity going into it than if you were to buy it to live in. That usually means somewhere around 20-25% down, sometimes more depending on the property, the borrower, and the program guidelines. Now I know some of you are probably thinking, wow, that sounds like a lot. But remember something important. This is not your primary residence, obviously. This is an income producing asset. Just imagine starting a small business and expecting the bank to fund the entire operation with no investment from you. That's not how business works. Real estate investing works the same way. Your down payment represents your stake in the investment. Next comes your closing cost. Now these are expenses involved in completing the transaction. Title insurance, lender fees, escrow items for taxes, insurance. In Texas, property tax and insurance can be very significant factors, so these numbers really matter. This is where many first-time investors make their first big miscalculation. They focus on the down payment, but they forget about the rest of the closing expense. And suddenly the numbers don't work the way they expect it to, and they get frustrated. Would it help if we plan those costs early instead of discovering them later? Exactly. Preparation removes any surprises. Now let's talk about reserves. This is where most experienced investors really separate themselves. Reserves are funds set aside for after closing to cover mortgage payments if something unexpected happens. Vacancies, repairs, tenant turnover, things that happen all the time. Rental properties are a business, and every business experiences fluctuations. So just out of curiosity, how important is it to you to sleep well at night knowing your investment can handle these surprises? Because surprises happen all the time. I own rental properties, I know that. Let me give you an example. I worked with a first-time investor who found a property he loved. The numbers technically worked, and he had just enough money for the down payment. But when we looked at his full financial picture, there wasn't much left afterwards. So I asked him a simple question. How would you feel if the water heater fails 2 months after closing? Or the roof has hail damage, you need to pay a deductible? He kind of laughed and he said, well, he thought about it, and the conversation shifted. Instead of rushing to the deal, he decided to wait a few months, build a stronger reserve cushion, and then move forward on this fall. That decision made him a much more confident owner, because investing shouldn't feel like gambling. It should feel like a strategy. So let me tell you another story that illustrates this. An investor came to me saying he wanted to buy as many properties as possible, as quickly as possible. He'd come into some inheritance. He wanted to invest in real estate. He was focused on maximizing leverage, putting the smallest amount down, and stretching every single dollar. Now that approach can sometimes work, but it also increases a lot of risk. So I asked him a question. I said, how would you feel if your last 2 tenants moved out at the same time? He paused and he said, because suddenly the strategy felt different. We ended up structuring this first purchase much more conservatively. He kept strong reserves and maintained liquidity. As they say, cash is king. And something interesting happened. A few months later, another investment opportunity appeared, a property priced well below market value, which is unusual in this area. And because he had maintained the reserves, he was able to move quickly and purchase it. The second deal happened because he didn't overextend himself on the first one. And that's what a smart capital planning does. Now here's the final piece people often overlook: unexpected expenses. First-time buyers for sure. Even with reserves and planning, rental properties sometimes surprise you. Repairs happen, maintenance happens, markets change. That's why strong investors think long-term. They don't just ask, can I close the deal? They're going to ask, will I feel comfortable owning this property a year from now, 2 years from now, 10 years from now? That's the real question. And another investor I worked with once told me something interesting. He said, Mark, I'm not trying to buy the most property today. I'm trying to build the most stability over time. And that mind stuck with me 20 years ago, because the goal isn't just to acquire properties. The goal is to build a portfolio that survives and grows and makes you money long term. And the financing plays a big role in that. So when people ask me how much cash they really need for DSCR loans, the honest answer is really enough to enter the deal responsibly, enough to close the deal confidently, and enough to handle the realities of owning investment property, rental property. That's the investor mindset. So I'm not sure DSCR loans are the solution for everyone. But for investors who think strategically and plan carefully, they can be incredibly powerful tools for building wealth. So if this video were helpful at all, go ahead and like and subscribe and share it with other investors. But before you go, I want to give you something that I think can really help you. If you're shopping for a mortgage or planning to soon, I put together a simple, easy to read consumer guide I call The Truth in Lending. It breaks down exactly how lenders price loans, how to compare quotes the right way, what fees actually matter, and how to avoid getting overcharged. There's no fluff, there's no jargon, just the stuff I wish every buyer knew before they started shopping. And because you watched this video all the way to the end, I want to give it to you for free. Just comment your email below and I'll get it to you out ASAP. I think you're going to like it. Use it as a cheat sheet anytime you're comparing lenders or trying to make sense of rates and fees. I've been doing this for over 40 years, and I promise you this guide will save you time, money, and a whole lot of stress. So if you want to know the truth, and I mean the real truth, about how to shop for the best mortgage, grab yourself a free copy, enjoy it. If you have any questions, you know where to find me. I'm Mark Harrison with Texas Mortgage Source, and I'll see you on the next one.